Why is the American middle class feeling more squeezed even as the stock market keeps hitting new highs?
On one side, the rich are watching their assets balloon. On the other, middle-class families are under growing financial pressure. This economic split in the US isn't just a simple story of the rich versus the poor. It is a structural reality that can be fully verified with data.
Can you show me the data?
Look at the numbers. The share of American adults in the middle class has been steadily shrinking. In 1971, 61% of adults were middle class. By 2023, that share had fallen below 50%. The share of national income going to the middle class dropped from 62 to 42% over the same period. Some families moved up into the high income bracket, but a much larger number slipped downward into less stable incomes. What is driving this growing gap?
The key difference lies in how these two groups make money. For the top 1% of households, wealth comes mainly from capital gains, stocks, equity, business ownership, and real estate. Wages make up only a part of their income. When the Federal Reserve pumps liquidity into the economy, stocks rally, and asset prices rise. The wealth of the rich gets magnified directly. After 2008, multiple rounds of quantitative easing fueled a stock market boom that lasted more than a decade, while home prices also kept climbing. The top tier, sitting on large financial assets, captured the lion's share of those gains. Between 2022 and 2025, the AI-driven rally pushed the asset share of the top 1% of U.S. households from 27% to 28.9%. And what about ordinary middle-class people?
Most middle-class Americans, by contrast, rely almost entirely on labor income, wages, and salaries. They hold very little in the way of stocks or equity. Wage growth has lagged far behind asset prices for decades, and it has also trailed the rising costs of essentials like housing, healthcare, and education, adjusted for inflation. Real wages for the middle class have grown very little, remaining nearly stagnant for years at a time. Home prices, rents, childcare, and health insurance premiums have consistently outpaced those wage gains. For many families, the monthly mortgage payment already eats up more than 30% of after-tax income. Childcare and medical bills have become crushing fixed expenses. Plenty of households earning over $100,000 a year still live paycheck to paycheck and would struggle to cover an unexpected expense of $1,000.
Does the tax system make it worse?
The tax code widens the gap even further. Wage income is taxed at higher progressive rates, while capital gains like profits from stock appreciation or the sale of a business face lower tax rates. Making $1 million from a job versus making $1 million from stock appreciation results in a noticeably different after-tax income. Wealthy individuals can use deferrals on equity, business deductions, and other legal means to effectively lower their tax burden. Middle-class wage earners have almost no such room to maneuver. Their income taxes are withheld straight from their paychecks.
What role did manufacturing jobs play in this?
The loss of manufacturing jobs is another major piece of the puzzle. Starting in the 1970s and 1980s, many high-wage manufacturing positions were moved overseas. The blue-collar jobs that once anchored a middle-class life became scarce, pushing a large share of the workforce into service. Sector jobs where pay ceilings are considerably lower. A generation ago, an ordinary factory worker could support a family on a single full-time income. Now, many households need both partners working full-time, just to maintain a similar standard of living.
So the economy can do well, but workers don't feel it.
It is important to distinguish between two separate things here. The overall US economy and the stock market can keep doing well, but macroeconomic growth does not automatically translate into higher wages for ordinary workers. The dividends of growth are captured mainly on the asset side, not on the labor compensation side.
Are people just borrowing more to get by?
Meanwhile, debt has become a cushion for middle-class households. Student loans, credit card balances, and medical debt keep piling up. Many families use borrowing to paper over the decline in their real purchasing power. In 2025, U.S. consumer bankruptcy filings rose noticeably, a sign that household debt stress is reaching a breaking point.
Is the situation hopeless for everyone in the middle?
To be fair, this does not mean all middle-class families are getting poorer. Some do move upward. And within the wealthy group, plenty of households also take losses during economic swings. But the overall statistical trend is clear. The gains from asset appreciation are concentrating more at the very top, middle. Class families, whose incomes depend mostly on a paycheck, face steadily rising living costs, and are accumulating wealth at a pace far slower than the rich.
So what is the bottom line?
This divergence isn't the result of any single cause. It is the product of monetary policy, industrial shifts, tax design, and labor market changes, all compounding over many years. It is the core feature of America's K-shaped economy today. One part moving up and another part stagnating or sliding down.